Well, good afternoon, everyone. Scott Henderson, shooter. We, of course, enjoyed our holiday, took a little bit of a break, so we're trying to get caught back up here. It's about 7 p.m., September 1st. Hopefully, we're up to speed. Going to go over swing trade notes. Of course, at the end of our presentation, please do review our disclosure. Okay, wanted to jump right into sectors. There are different tells that we have in the market. And the first thing that I'd like to point out is last week, utility. Absolutely the lag. So the first instinct that tells me is that we have no flight to safety, consumer discretionary as well, second line there, as well as information tech was off. So we have some clear rotation because I think the concern is that AI might not, the capex might not be as quick as everybody's anticipating to generate some revenue. So I think that's starting to come into the mix. Right or wrong, just my thesis there. Now, one thing I did in this week's article is I brought in both a monthly snapshot on the sectors as well as altcoins. And part of the reason is I want, as we see things in the market, time frame analysis is important. So sometimes we have to zoom out, look at the big picture to give us a clearer focus, okay? But I'd also like to note that here on the monthly, notice utilities again is the lagger, right? So there's no fear in this market, either that or it's on vacation. I don't know which. Okay, we are going through the recap for August 25th through 29th. And really what we saw was just a rotation week. We didn't really see a big sell week. We saw no follow through on it. And we got one little basically push to the bottom side of the ledge and we held. And, our leaders, we're sort of anticipated going into the week. We expected energy to lead. We expected banks to continue to lead. We even expected Google. Ironically, is we started to see some selling in both Nvidia and Meta. And then Tesla also joined the club. Oracle also came off. So what we're starting to see is some of the secondary AI plays. The market's sort of saying, maybe we're a little overdone here. So this rotation, it could get more extreme, could get more noisy. Whenever we develop a broadening formation towards a top, this is what happens. We get much more of a deeper range in our sells. So I would suspect that if we look at the NASDAQ, we might get back to our $8 to $12 a day range, because realize we've been in this $2 to $6 range. And I'm talking $6 was extreme. I mean, there were some days we stayed within 250 or 2.25 as far as the range for the index. And that type of tightness always gets resolved. The question is it going to be bullish or bearish? And it really depends on where we are in the count. But ultimately this week, up above 650, I think there's supply for price up there. I actually think we could run up to 670 or 690. Unless there's some kind of catalyst that pulls us back. I would rather get a decent back test here, and I'm talking not just the follow through. We got about $24 on that last drawdown in the S&P. I would have liked it been a little deeper. It was barely at the 382 fib. I would rather have it hit the 50 fib or the 618, because then we get some seller exhaustion. So we still have some pent up sellers here who are like holding on because they want to reason to sell. And, so it could force a pretty quick sell if we get in the right situation. So my bias basically is above 645. I'm looking for 657, 660 this week. We lose 642. I'm looking for 637 down to about 634. And of course, I expect the rotation to continue. We're going into these sector heat map. We're rolling into sectors. Financials is staying hot, except for Lilly. Healthcare was weak, except for Google. Communication services was weak, right? And consumer cyclicals, the entire sector was weak this week. And consumer defensive was weak this week. Well, industrials was a mixed bag. We had specific leaders. We talked about Boeing. We talked about GE. We talked about RTX. So we have a good idea of where the rotation will be. So basically, we look for weak in Nvidia. We wait for us to find a bottom basing pattern. We know rotation is going to go back into Nvidia. We know it. Okay, just like with Tesla, weak bag, we find a basing, we know rotation is going to go back into it, right? Just like Costco or Philip Morris, So when we have a lagger going into a period of time, realize rotation is going to come back in and buy that because that's how it works. All right, let's take a brief look at Bitcoin. Rough week. I'm holding. I'm going to take some heat, especially if we continue. What's most notable for me is we lost our strength in Ethereum and XRP. That's what's most notable here. And they're almost like, the generals I call in the stock. So really BTC, Solana, XRP, Ethereum, and even BNB have sort of become the generals in the market. And then when we come down and we look at the dominance number in Bitcoin, both Ethereum, XRP, and BTC lost dominance. Solana pretty much stayed flat. We go and look at our altcoins. Now, this is a weekly look at the altcoin map. We had a few leaders. Now, the thing with looking at relative strength is a question that always comes to my mind, are these going to be our leaders moving forward? Relative strength is an important fact. So when the market gets turmoil, we get some upset, we get some selling, we want to watch the names that are holding up because that does show us that there's some strength there. And so, I have no knowledge of PYTHM. CRO, I've done a little research on. But we go back and we look at our monthly altcoin. Clearly we have a leader here at OKB. So, like I said week before last, I think that I'm trying to hunt a position in there. I have not added anything yet. All right, as far as performance last week, minor week. Actually, I'm glad I ended up green. I only really took that snow trade for a quick $1.90 in gains, and that was pretty much it for the week. Didn't book any losses last week, even though I probably should have closed some positions because I'm open here. If we take a dump in the markets, I'm a little more exposed than I would like to be, but just like I'm talking about the tells in the market, with utilities, all these factors, I'm like, this is just a retrace and something's going to give us the pump to keep going here. So we've got about $53 in unrealized gains. Now I'm only showing $15 of the ACML trade, all right, versus there was actually $40 on that. Reason is I skewed it down because I didn't want it really to offset my numbers. So, once in a while, because it is a larger position than any other position I have on right now. So whenever my tape gets skewed that much, I want to make sure I reflect a more accurate number of what my trading style is for everyone. So we have quite a number of positions that we're upside down on. Him specifically. Beyond, we're actually upside down just a tad bit. NEO is earnings coming out tomorrow, so that was the idea of that play in the first place. SBT, we're sort of flat. Sound, we're upside down on, I think about $3. Outside of that, that's really it. So I only have about, right now, my visual is I have about $8 or $10 at risk. So I'm pretty solid, but I don't want to build up more. That's the challenge here, is it's got to be a trade that I really like. Now, let's look at earnings. Now, CRM, and I went back and forth with CRM because it'd probably a good trade. Broadcom is probably a good trade. However, I come back and I'm like, TTD. It's amazing how when you have a loser, how much it influences your decision. So what I'm trying to avoid into this late stage of earnings is put myself in a position where I can take more heat than I need to here. So now NEO is something we have a position in. It'll be before the open tomorrow. And the main reason we have NEO is because, a couple factors. First of all the social media posts about how busy their lobby was and everybody liking the car. And then they did that announcement that they were opening their sales centers till 3 a.m. because they were so busy. Everybody couldn't get in to see the cars, kind of thing. They were too mobbed. To me, it's just a building factor. I bit the pump. Okay, that's just the shortest way to put it. All right, now we'll go through Zscaler, but Zscaler I like. We've put that on this week. Like a very similar trade to what we did in snow. All right. And I went through every one of these names and I really drilled down, especially on Credo and AI, GitLabs, HPE. I just didn't like the risk reward. It wasn't high enough risk reward. I don't want to take on a risk into earning for a 20% annualized. Right now, there's no need. I'm not desperately hunting yield at this stage of the year. At this point, I'm retaining the gains that I've had. if I don't make another dime between now and January 1, I'm completely comfortable with. So asymmetrically, when I'm looking at these setups, I'm very conservative. All right. Now we also put Figma on there, very shallow tape, but I'll go more into that in a minute. The next one that I really think Path, I think, does well. However, I didn't put that on because I didn't like the charts. There were just a lot of charts that didn't meet my muster, or they failed at the options. Because as I go through and I'm screening for setups for swing trade notes, not only do we have to have the setup, we have to have the criteria for the trade itself in the options to justify the risk. And that just a lot of names are not falling into that box right now. So let's start off with Zscaler. Earnings are Tuesday. I like this little pullback in, right? So sell to open the October 260 cash secured put, roughly for about $1,100, right? So that was at a price of about 277.85 when I drafted this up. I think it's up a couple bucks now already. But my thinking is we just get back to 300, right? Make it quick, 20 or 30 bucks on it, and then we close out the position just like we did with that's the trade. Nice conservative way to get a piece. If it misses, we're not going to get killed. Right? Now, Figma, no tape. Don't like. I don't like recent public offerings because there's just no tape. It's very, once you get that initial pump, right? Which, it released at 33. We're still at 70. However, we got earnings this. And, I actually don't do macro and micro very often on a name. But I spent about an hour digging into Figma. And let me just come down to my notes here. Cursor, Copilot, Google, Microsoft, right, have a direct connect to Figma for the UI management. So the front and back end, I believe UI is front, of all of these major sites and applications, like, for example, CRM's website, that's now being edited by Cursor, right? Or Copilot is doing that via Google or Microsoft. They all have direct link to the interface. And now I couldn't get the internal numbers on their Copilot, but this just feels to me like a total pump. This is a name they're just getting that. We just need to see some kind of positive earnings in the right direction. And I think they're going to come back in and buy this up. And I'm looking at this as peaking drive 1. So we get a peaking drive 2 up here. And then ultimately you get a third peaking drive up here. So, I can see $250 on this. This is the floor. So I'm only willing to risk about $68 from where we are now. It gets below that, I'm going to cut and run. But that's my thought. Now, unfortunately, that's all I had going into this short week. I didn't have anything else. Well, that's what we have for this week, folks. Great trading. Until next time.